When you're submitting an offer, there are a couple of different terms that you can alter in the offer to make it more attractive. We are a due diligence state. So due diligence is a fee that the buyer pays directly to the seller so that the seller will take the home off the market in order for the buyer to do their due diligence. They're going to get an inspection, a home inspection. If there's a septic, they'll get a septic inspection. If there's a pool, they'll get a pool inspection. If you're getting a loan, you'll also be getting an appraisal, which an appraisal is what the bank values the home at. So appraisal and purchase price are not the same thing. The due diligence money that goes towards the purchase price of the home, and it is non-refundable. You write that check to the seller, it's gone. It's not your money anymore. It's the seller's money. In recent years, given that it has been a very strong seller's market, due diligence has definitely become a bigger factor. It used to be, you know, you put down $1,000 and sellers are like, and now it's like, you only put $5,000 down. When I explain due diligence to out-of-state clients, they often get very angry, which makes sense because they're coming from a state that doesn't have this, where they're not putting non-refundable money down when they're purchasing the home. It's something that unfortunately is a really big factor when buying a house in North Carolina. The likelihood of your offer being accepted with $0 down in due diligence is very, very slim. If due diligence is something that really scares you, guess what? New construction is probably the way for you to go. D.R. Horton, H&H Homes, typically they don't have due diligence. They'll just have more of like an earnest money kind of thing. So if I ever get anyone that is from out of state and they are just having a total conniption with due diligence, I immediately recommend going the new construction route because that is the only way you can really avoid it in North Carolina. Second deposit is called your earnest money. This is like waving a little carrot in front of the seller. Earnest money also goes towards the purchase price. It is refundable should the buyer terminate the contract during the due diligence period. If due diligence period passes and the buyer terminates the contract at that point, earnest money is now the seller's money. The due diligence amount and the earnest money amount are completely negotiable. It really just depends on the property, how much interest is in the property, how long it's been listed, what price range it falls into, what is most important to the seller. You do not pay either of those deposits until you have an accepted, fully ratified offer to purchase. So both parties sign the contract, and at that point, the checks are written and delivered. So it's not like you submit an offer with those checks. Those are only paid once the offer is accepted.